Oops, was I wrong about stock selling off? Because Apple is bright green here in after hours, and it's back in blue sky territories, back above 183. It's up by 7% in after hours here. Oh my goodness, you do it, Apple. You go, Tim. So I might be wrong about stock selling off into the summer, and we're going to go through that exactly today, which means sell in May and go away and come back on Labor Day. Apple rallies after company forecasts a return to sales growth. iPhone maker performs better in China than expected. Apple also raised the dividend, plans to buy back more stock. It sounds a lot like Tesla. Apple announces the largest ever 110 billion share buyback as iPhone sales drop 10%. There you go. They're buying back a whole bunch of stock. But as I'm thinking about these large cap stocks, we have a little bit of a leftover from Jerome yesterday. We had two dovish statements and two hawkish ones. I'm going to play you a short little clip at the end of this video to tell you why I think this is really important. Two dovish statements or bullish for stocks and two hawkish ones. But what this really means, you might not be really surprised, is that I'm still looking at two patterns. I'm looking at the S&P either hitting its target, same thing with the NASDAQ, or going down to their stops. I'm not sure which one's going to hit first, but this is a really big clue for me. Just like here, we're looking at Bitcoin that came down to the 50 MA, tried to bounce, failed, came back up and rejected on the 50 and then went down. Well, that's kind of exactly what the S&P did here. Bounce off the 50, lose it, reject, and go down. What's really notable to me is that we don't have higher highs, just like we didn't have over here. So why is that important? Well, because as of right now, we'll see what the S&P can do, but if the gap up holds, we're going to get a daily higher high. Is it going to hold? Hey, we'll find out, right? This market moves fast. All right, so I'm aiming for a shorter video today because I have to head to the dentist. So anyways, if the market goes back up to its target, that means that we're back above the 50 DMA, which we've already talked about for our dip recipe. There's no way we're going to go higher if we're below the short-term price. We're going down. And as of right now, that's what we're doing. So these two templates tell us that we want to be patient to reclaim that 50, because if we get over, back test and pass it, that is excellent. Same thing here with the NASDAQ. Got to get over, got to back test, got to pass. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel. Thank you so much ahead of time. All right, so we talked about the leading indicator, which I still trust. And Bitcoin is important here because it did not hit the target. All it did was go lower, which means we might be hitting that target here if we repeat what Bitcoin did, which means take out this key low. It's exactly what we're looking for here, just a little bit of a sag. So if that happens, hey, the bears are likely correct. I'm probably right, but I wanted you to click on today's video and the market's green. That's why I said maybe I'm wrong. Finally, what will be important into tomorrow is going to be unemployment and non-farm payroll. So the numbers are supposed to come in at 0.3 or same as the previous number. Same thing as unemployment. Non-farm payroll is supposed to come down. And this is notable because yesterday I said that GDP is actually rising. Q2 for Fred at the St. Louis Fed is currently at 3.27. We'll find out whether or not this is going to come true. All right, now let's watch a short clip. So give me 1 second here as I get this tab loaded up. Here we go.
Bob, your thoughts on this one?
As Michael McKee was reading through the commentary, I thought, boy, this is really good for the markets, because here is a Fed that's telling us, look at the longer term. Look where inflation was and look where we've gotten it to. Don't worry about the last couple of months. We'll see what happens there. I actually think that's the right message. I don't believe the law of long and variable lags has been repealed. I think they've been delayed because of all the fiscal stimulus that's still in the pipeline, but they're still there. You are seeing some pressures on the economy. Like Mohammed, the only thing I was surprised about is that they characterize the economy as still solid.
Yeah, look, Mohammed, I want to bring this up. I brought it up earlier with Bob Mike. I'm going to do it with you right now. I don't know where you were in 1995, maybe at the White House, Mohammed, maybe IMF. But the answer is Bob Michael says there's whispers here of 1995. The stock market was a moonshot off of the success of 1995. Is that what we are prepared for here, that they may get this right? We may have a constructive 1995 and up we go?
So where I agree with Bob without any qualifications is that this particular statement is something that the markets will like. It's exactly what the market wanted.
Ooh. So if you heard correctly there, let me just get back to the video here. So if you heard correctly, I heard a few things. I heard that the market should like this. I heard that it might be 1995, and I heard stocks should like this. So all we need to do is to see stocks go up to their target, and that's basically it. This is what the market wanted. So if we get a bullish reaction after bullish news, that's exactly what we want to see. We want to see this target get taken out. And what Bob Michael from JP Morgan said is that the Fed characterized the market as strong. Well, yeah, 3.2 is really strong. That's also the number that Jerome used yesterday. So today's video is quite short, but if you want to come hang out with me at 9:15 and 9:30 tomorrow, subscribe on the right-hand side or watch the weekend deep dive on the left. Thank you very much. I'll see you tomorrow.